Well, I do got to say, if you are still hanging around in the investment and financial sort of niche of YouTube, watching the channels, still learning how to trade and everything, you are in most likely for some pretty good gains when this market comes around, simply because people are non-existent. And typically what happens is you get all the craze coming in when the top is near, or the bull run great entry positions have already been here and gone. But I'm going to do a little bit of a different kind of format today. It's going to be kind of just a free flow long form, because I want to kind of give a state of the environment right now. Any YouTuber out there that does finance or stocks or trading, or crypto, maybe even real estate, not exactly sure, but anything along those lines, you are seeing that we are full-fledged in a cool down, at least when it comes to retail. Now, that is actually a good thing if you are a trader, because, well, for one, dumb money and smart money, right? Dumb money, smart money kind of do the opposite, right? So when all things when the dust has settled and people have either made a ton of money or lost a ton of money in the market, when a cycle is coming to an end, when a bull market has come to an end, I should be careful about how I word that. I should more so say when we are deep into a cool down, into a bear market, and the dust has settled, that is when smart money starts to gather their capital and start maybe slowly adding into their positions. Retail has exhausted their capital. They have exhausted their tolerance for losing money in the market. They are sick of gaining money and then losing it all, and they're upset and frustrated, and they start unsubscribing. They start to their YouTube channels, or they just stop paying attention to it. They stop searching for their next kind of trading tips. And you see that in sort of the YouTube analytics, which can be measured if you have a YouTube channel, your YouTube studio, but you don't need it actually. You don't need a YouTube channel to look at those analytics. You can look at Social Blade. And what I'm gonna do is I'm gonna go through the Fear and Greed Index right now, and we're also gonna cover dumb money and smart money and where it's at, and who is buying what and who is not buying. And then I'm going to cover like just some Social Blade accounts, some big and small YouTube channels, to show how they've performed over the past couple of years. Because since, we can go back to about 2021, I think, on Social Blade, which is really this, kind of huge, a big part of this huge rally. And then we can see the down, and then the little bit of the rally, and see where we are right now. Because you want to be positioning yourself really when the dust has settled. So let's just start by getting into some of that. First of all, right off the bat, I mean, the S&P 500 is up 1.19%. So stocks rebound on rising bond yields. So the bond yields have kind of whipsawed the stock market the past couple of days. The thing is, and I encourage you to go to Benjamin Cohen's YouTube channel. He did a video very recently comparing the bond yields, the inversion, and how that reacts to the stock market. I can very simply just dumb it down real quick and say that in the short run, I don't exactly know what's going to happen. I did leave this drawing up just to kind of see. This is something I talked about, a couple weeks ago, and then I covered it a day or two ago. It's kind of interesting. We have this huge bounce off of these bond yields inverting. At the end of the day, I said this a couple weeks ago, and I said it the other day before this day happened. We are approaching and consolidating at the market bias indicator that has proven to be a pretty reliable indicator. The only downside on it is that it can repaint sometimes. Even though it can repaint, it still is pretty reliable. So that is why I drew this right here. I should really change the color on it just because it is very similar to, let's just go, we will pick, we don't want blue. We don't want yellow. Okay, we'll just do red, I guess. Okay, just so it stands out. I drew this a little bit ago, but I talked about it weeks ago, right? Is that we're probably going to get a bounce up off of this market bias indicator, whether that continues to the upside or it comes back down. We obviously don't know, but I am leaning towards it coming up to some degree or another and then coming back down because of the Fed and what they're trying to do with interest rates. What they are trying to do is they are trying to raise unemployment. They are trying to cool off the housing market, and they are trying to get inflation down all at the same time. And none of those things necessarily fight each other. They actually work pretty well with each other. What might be holding things up some is you have policies from the administration, the Biden administration, that doesn't make any sense for what the Fed is trying to do. Canceling student loans. They did it for federal workers. It was another like $9 billion or something they canceled. Does not help slowing the inflation. So that doesn't quite make sense. It would have been more damaging to getting inflation down should the Supreme Court approved the Biden administration's ability to cancel all student debt, which they struck that down. We're not getting political here. We're just stating facts, okay? On top of it, you have the Biden administration also setting in place a program. Now, to be fair, I don't know if this was a law that changed or a law that was passed or not, but obviously whether it was a law or executive order, Biden has to approve it. Of promoting and having lower interest rates for people who have worse credit than people who have better credit or good credit or excellent credit. Now, that makes absolutely no sense for what the Fed is trying to do. That is the exact opposite of what you want to do because it is encouraging housing buying. And you want a slowdown overall. You want the people that are selling their houses at a rate that is pretty high. I mean, prices overall are pretty high. You want them to feel the pressure of less buyers out there so that they lower their price, which cools off the market, lowers the prices overall, lowers inflation. Housing is very significant in terms of inflation. So that makes no sense. The Build Back Better, which we're going to make thousands of jobs, hundreds of jobs all across the country. Again, I'm not saying that's bad, but that's not what they're trying to do. So they're putting out policies that might just be hurting the Fed's ability to do what they're doing. And when the yield curve inverts, it can take time for the effects to reach the economy and to reach the stock market. So we could see this continue to go up for a little bit before it goes down. My overall thesis is that we are going to head lower because we are going to see a recession in the near future, either at the end of this year or at the beginning or middle of next year. As of right now, the interest rates are set to have maybe one, maybe two more hikes. Probably not two, maybe not even one. and they might just flatline for a little bit until sometime of next year. The reason why is because the Fed feels like they have done enough and they just need to wait. And some of these policies, they're not going to say this because the administration has power over who is in Powell's chair. But the policies are not helping what they want, and it's prolonging everything. So overall, my current thesis is that we're heading lower. We're probably going to see a bounce, which we already did, but it remains to be seen how high this actually goes. But off of this market bias indicator, it's always tricky because a lot of times the news follows the stock prices and follows actually the indicators. Individual news here and there on a particular stock has a lot more power, has a lot less power in the long term than some of the macro news. So, for example, like the bonds, and so we don't, the news of the bonds could more or less, the yield curve and everything could more or less be more powerful than what some random news of NVIDIA is for the overall market. So let me get into real quick the fear and greed index. Okay. So we are right now in fear, leaning towards extreme fear. It wasn't extreme fear the past couple of days. It is just reaching fear, probably because of the past couple of days have been pretty green, especially today. And this right here in the long-term approach, extreme fear and fear, reflects what I'm going to show you down the line, which is dumb money and social media, just social presence, just activity, online activity about stocks and investing. And so right off the bat, we're in fear. We have left extreme fear, although I do think we're going to be going back to extreme fear. So just keep that in mind as we are kind of going through this. So if you just go to real quick, I'm going to skip that. Dumb money right here. So you can see it's taken a huge dive. When was it last updated? Let me see if I can get that. So the end of September. So September 28th is when it just updated. There was the end of June. It was still pretty high and we were still at that top. And I can tell you just from my personal experience, but we're going to run through some social blades. Social media activity, YouTube views, subscriptions, all of that has pretty much gone down a lot in the past month or so. I mean, and you can look at my video history to the point where it's almost, it's hard to even make it worth it to make videos. But nonetheless, we're still here because it's fun, and I am here whether we're in a extreme bull run or extreme bear run. So we're still going through it. But you can see right here now, there was after COVID. So COVID had that huge plummet, and we stayed elevated for quite a while because even here is still elevated when you actually look at everything. It's still above average. And that was for about a year, maybe even more, until we reached that peak right here. And then we had a ton of volatility. And then we absolutely saw some increase for a little bit, just in overall social presence and activity. It wasn't a lot because it didn't last very long, because longevity, I feel like, also plays a significant point. And now we're just crashed. And I don't have the data up right now to find it, but smart money is doing the opposite right now. Okay. So I encourage you to look that up yourself to check it out. So I want to talk about some of social blades. Now I'm going to pick, you can see here, I already have some that I put in, obviously I always put my own in, check myself out, see how we're doing. But I have low data points because I've only really been around not too long, right? But let's take a look at someone like, let's start with a smaller account. So Crypto Cash is in a crypto channel. He does trading very similar to mine. He posts, seems like daily, sometimes seems like lately multiple times a day. And to be honest, that is probably because the views and the subscriptions have pretty much tanked. And if it's his full-time job, he's got to pay the bills. He's got to put food on the table. So why not pump out some more content, right? And for real, that's probably what I would do if I was a full-time YouTuber and I was in a cyclical sort of niche. So you can see the bull run. Let's just go back real quick. So that bull run ended the end of 2021. Okay, so keep that in mind. And then also another notable is August, September-ish of 2022. Okay, keep all that in mind. And also August-ish of 2023. And let's see what we have here. Let's go up so we can see the date. No, so 2021, right? End of 2021. There's that huge spike. Okay. And September-ish of 2022 was the little spike. So it didn't really reflect the volatility that we saw in the market. And I think it's just because of longevity. People were starting to come back. They were starting to do social media views, subscriptions again. You can see it reflect a little bit, a very tiny bit right here in his subscriptions. And what about right here? Let's see what that. So May-ish. So a couple months or so as that spike started to come back up, right? And then started to go back down, which reflects recently because in the past couple weeks or so or a month or so, we've been in a downturn, okay? So you're going to also see, let's go to someone bigger like Benjamin Cohen, who I talk about all the time on his channel. He's a really good YouTuber, does stocks and crypto. Started with crypto and has done a lot more macro economic environments while we're in the bear market of the crypto. So again, you have that spike right here, May of 2022, and his took so right here, June, July, a little bit of spike. He's coming back up now. That's good for him. So I just got a text. So that's good. Kind of doesn't really reflect so much in the subscriptions, but look at back here when the bull market was longer and people were able to have time to come back. Stocks were getting in the news. YouTube was like, okay, this niche is going to kind of hang around a while. Let's promote it. Let's promote it through the algorithm, right? Take a look at Money Maven. Money Maven is a guy who does similar like stock channel than I do with the swing trading, and you're going to see it again. Now, obviously, none of these are going to be exactly the same. Maybe he took some time off right here. I don't think anything bad happened to his channel, but people could get canceled or whatever, but you can see 2021, a huge spike, had a little bit of waves as the stock market came back. See, everything's about, March, April, May-ish. And then that steady decline in his started going down very recently. So opposite of Benjamin Cohen, which is quite interesting. Could be the amount of videos they're putting out. He could have went on vacation, who knows. Let's take a look at one of the big guys, Ricky Gutierrez, one of the most popular or the most followed or subscribed to YouTuber out there. And he had a pretty big spike right here, September of 2022. Okay, so, and that's follows similar to previous end of year of 2021 or beginning of the year 2021. But this right here is September of 2022. As we showed on the chart, we'll go back to the chart and show it again. A spike as the market started to go up. Okay. And he has also taken a little bit of a dip here. We can let's go to one more. Let's go to Meet Kevin just for the heck of it. Cause he's pretty big as well, but it's hard to kind of say what his channel is nowadays. He's shifted between following, I don't know, different trading indicators, but then also looking at investments long-term, does a lot of real estate, stuff like that. He had the big spike again when Everything else is just taking off. A little bit of a increase right here as we approach September. Actually took a dip in September. And there was this little spike right here. I even noticed this spike around the same time as well. And that was similar to the last couple of channels that we saw. And now he is seeing a little bit of an increase, similar to Benjamin Cohen. So if we just go back quick. So moral of the story is to look at social data the same way you would look at stock indicators, but also, you know, fear and greed index, all that kind of stuff. What is inflation at? You know, all of those things. Don't isolate any one thing. And social data is a very significant factor. It is going down. It is on the downside. It has been on the downside for the past couple months or so. And you can see so has the stock price. I mean, you look at a lot of those YouTube channels and their analytics, and it very much looks like something like an RSI. It comes and goes. So what that means for us as stock traders is, first of all, if you're still here, you're already a contrarian, right? Compared to most people. But don't wait until all those people come back to then start buying again, right? You are better off getting in around here, let's just say, right? And even if it comes back down, now you're just even, or even if it comes back down to like 320 or something, you already have some position in, you DCA, and then when it starts to come back and it's reaching newer highs, you're ready to start selling out some of your position, while everyone else that is starting to come back in, starting to resubscribe to the people they used to subscribe to, starting to check out channels, the YouTube algorithm starts coming back. And that is time for you to sell, because that is what smart money is doing. Okay. So is it tough to stay motivated to make these sort of videos all the time, just different stock videos? It can be, because it's hard to know what people want to watch, because not a lot of people are watching them. But what we are going to do with this channel, we are going to keep looking at good entry positions, and we're going to keep covering them. And we are going to start loading up on some long-term stocks, or loading up even just on swing stocks soon. Not yet, but soon. TQQQ would be a heck of a one. The S&P 500 had one good day today. It's like 1.1% or something like that. I don't remember what I said earlier. TQQQ was up 5.03%. TQQQ is a triple leveraged ETF of QQQQ, which is the tech sector. This is actually looking pretty good as an entry. Kind of like a bounce, but we're still a little overvalued here. I would like us, and maybe this is what has to happen. Let's do another drawing. Maybe what has to happen is QQQ to come down, at least to here, because what that would mean for the S&P 500 is probably a little bit lower, probably down to about here if the TQQQ goes down that much. Probably about to there. Okay, that's all I got for you. If you like this video, please hit the like button, because we don't have a lot of activity right now. But we're still building. We got a couple more subscribers today. It's good. And that's the easiest way to help out the channel. But just stick around, hit the notification bell so you can see all this latest content, so you don't forget about the channel as the YouTube algorithm promotes the NFL and Taylor Swift. We'll see you next time. Have a good one.